Good morning, Predicted Trades family. Hope everybody is doing well. It is Friday, September 16th. It is OPEX on the market. Monthly option expiration. We also have quarterlies going on right now. Yesterday we had a very decent day in the room. We opened near our squeeze bottoms, which give us some confidence to go long off of those squeeze bottoms. We hit those longs up near squeeze tops, and then we reverse direction, taking shorts back down. And even if you didn't catch it at the squeeze top, when we break below a key level like this 39.61, that's when you get short and take it down to our next key level and next key level, right? We tore through from that 39.61, tore through that 39.41, made it down to our 39.22, where we caught a bounce, also running into trend lines from low of year. We bounced from that 22 right back up to 61. That's where we got long again. And once we rejected 61, we're short again into the end of the day. So great day in our trading room yesterday, calling every turn. Today, we're gapping down below our trend lines from low of year. Normally that would bring some increased selling when we give out a critical trend line like that. But it is monthly option expiration. We did have a big drop this week on those CPI numbers. I'm pretty sure we have gone further than the expected move this week. So we might have a scenario where market makers need to bring it back up and park it to recover a little bit, right? Also, we are gapping under the trend line that we were holding, so we could have a scenario where we push back up above that trend line and then just settle. We do have POC up above. It was 39.29. It stepped down a little bit to 26 since we had so much volume yesterday around that area. But basically, 39.26, 39.29, creating a zone up here. That is a target if we do come back to fill the gap. And we could get up into our levels that we've been at all week. Since that drop, we've just been kind of chopping around that 61.41 and setting progressively lower lows. So for today, we do have some economic data coming out at 10 a.m. It's just the University of Michigan Consumer Sentiment Index and the 5-year inflation. I'm not going to pull up the economic calendar because that's the only thing going on. So around 10 a.m., 30 minutes into the session, we'll get that economic data release. We'll see how that comes out. We could have a scenario where we pop up in the first 30 minutes to fill the gap. We have that data come out, and if it's favorable, we could continue back up into our range. If it's not favorable, then we could set up a short back. But key levels for today, we've made it to this 38.78 in this overnight gap down and found support there. Let's see if once we open, we can hold that 38.78 key level of ours. We do have a small 30-minute squeeze that's in place, the bottom of which is pretty much at that 38.78. I'd let it go as low as 38.70 on a dip, But ultimately, if we can hold that 38.78, looking to push off of it, get back to 3900, get back to 39.22 where we closed, and even tap POC. We have slipped below those trend lines from low of year. A retest is warranted. If we can get through POC, then obviously we're coming back up to these three key levels that we chopped at after that CPI drop. Our daily 8 MA has stepped down right at that 39.61 level. We always love it when those daily moving averages line up with our key levels. It can create another magnet, right? So we have a magnet at POC. Let's see if that can propel us further to the daily 8. If we can get some upside today, if we get sentiment from buyers to fill the gap and beyond. But if we continue to reject 3900 like we did overnight, and that 30-minute squeeze top at 3900, and reject, then we'll take out this 78 overnight low and head down through 70 on our way to 38.65, where that second Keltner sits, and below that we have 38.43, so creating a target zone below should we continue to slip down. Next key level below that is 38.07.5. But it's an OPEX Friday, not really expecting that far of a move further down today. But anything possible, right? So we have our key levels, key zones below. We got one zone right here below our overnight low. We've got zones up here to get back to. So let's see what we get. On to NQ. On NQ yesterday at open, we held that 12,100 that we've been holding all week. That gave us further confidence for that long. And then we shorted back. And once we got under 12,100, I talked about how that is a huge level. It was support on the rally up, right? We tried to hold it. We slipped under it. We got back above, turned it to support. Even a quick little wick there to retest, and then took off. And then we tried to hold it all week. So once we got back underneath it, I talked about how we can fight back to it and VWAP. But then if we lose it again, it sets up a late day short, which is what we got. So on NQ today, we also have a 30-minute squeeze going on. The bottom of which near those overnight lows around 850. Top of it is around 920, 930. We do have our daily Keltner just a hair below, to where we could hit the bottom of this squeeze. And it'd be about a 30-point dip to get there, but that can happen quickly. So we could have a quick dip to that second Keltner, to the downside, get right back above and push, or we could hold those lows and just start to push. Don't necessarily have to go get that Keltner. If we can get going to the upside, looking to get back and fill the gap and get to this psychological 12,000. Past that, would like to get back to that 12,100 and that daily Keltner for a test. If we push any further, we have the daily 8 right back near yesterday's highs now. But if we're going to break down, first stop is to test that daily Keltner and 11,800. If that gives out, likely coming through 750 on our way to 677. Any further than that, I mean, I don't think we'll get there today, but our third Keltner sits right now down at 11,500 psych level. Alrighty. So talked about how we were in very tight squeezes yesterday on multiple time frames. And when that happens, we can push from bottom to top, back to bottom, back to top, back to bottom. So whenever we have very tight stack squeezes like this with our red and orange, we know we aren't usually going to break out. But if we keep pushing against one end of the range, and if we close near one of those clouds, we can gap in that direction and start to open them up. That's what we're getting now. So we had a 1 hour and 2 hour squeeze that have now opened up and fired to the down. Excuse me. Fired to the downside. Let's see if that momentum continues. We have a new 30-minute squeeze, the bottom of which kind of near those overnight lows. So let's see if 1810, 1812.5 can provide support. If we're going to get some bounce to the upside to fill the gap, need to get through that first Keltner to the downside at 1822, that squeeze top 1825. Filling the gap would be back to 1835, and now the daily 8 has stepped down in the middle of all of that price action, daily 8 and daily 15, so for an upside target. For downside targets, psychological 1800, not too far away. And then past that we have the next Keltner, looks like second Keltner, down at 1780. YM. Same thing, contained in squeezed tops, closed down near the bottom, so those are firing. We are near that second Keltner down, which sits at that 30,750. We've done a good job of holding 800 overnight, so let's see if that 50-point range can provide support for us to come up and try to break this down channel we find ourselves in. If we can push through 850, looking to get through these pre-market highs, 30,900, 950, where the squeeze top sits. If we can get past that, we're talking about getting back to a gap fill at 31,100, but we do have that psych level of 31,000 looming over us. To the downside, if we start level 30,500, and the third Keltner to the downside, sitting down near 30,200. Apple. Apple was a pretty clear sign that we weren't going to see much upside in the market yesterday. It opened near our zone here. It did give a nice pop while the market was going up, but the second the market started to take a break and come back, Apple was leading the charge down through this week's lows, setting new lows, bouncing around that 152, back to our zone for a retest, and then back to that 152. We are now getting close to our second Keltner down, right near this 150 psych level. So let's see if 150 can hold us up. I do have another key level at 149, kind of making a zone. Let's see if that can provide support. And ultimately, for upside, looking to get back to fill the gap near that 152, and then get back to our zone for yet another retest. To the downside, that 150, 149. If we keep going, 147.5, and the third Keltner sits down at 146. But remember, folks, it is OPEX. I am going to give targets to the upside to the downside. We could just stay in this new range that we find ourselves in for OPEX. But as down as things are, we could always get a pop just so that we're back in the same range. Market makers love to do that. And we can always just slip further, right? Not gapping down quite so hard, still above yesterday's lows. Again, for me right now, chips are kind of on a no-touch list because they have been getting beat up. They're already down near third Keltner. Nvidia, I think, is at third Keltner. Just overall chips not doing well. And think we have MU reporting at the end of the month. So they might be beating chips up so that they can start a potential rally into earnings. We'll have to see what the market gives us, but ultimately, let's see if AMD can hold this 75, start to work its way back up to 77 with a goal of getting to that 78.27. We do still have our 2-hour squeeze in place. That spans from that 75 to that 78.27. So that's the range we find ourselves in today. If we start to break 75 down, below 75 and yesterday's low, first stop 74, and that third Keltner at 73.62. Amazon. Definite large gap down. So looking not as good as like AMD. Getting down near that second Keltner, which sits around 121.5. So let's see if 121.5, 122 can provide support. First have to take out 124, 125 on the way to 126 to fill the gap. And if we break down lower, we've got psych level 120 and third Keltner at 117. BA. BA was actually decently strong yesterday, had some great relative strength. This bounce that we had on Wednesday was a great indicator of that relative strength. While the market was just chopping in a range, BA pushed out of a range. So yesterday basically held what was resistance and became support late in the day, dropped down there, took off, hit a daily Keltner and squeeze tops, came back for a retest, and then took off for more, back to the daily 8. Came back, and now we're gapping below yesterday. So on BA, let's see if 146.5, 146 can be support at this squeeze bottom. If it can go into the upside, looking to get back to where some of these levels we were at yesterday, 148, 150, 152, which is up in that squeeze top. If BA loses that 146, coming to test that 144. And should that give out, our next daily Keltner is down near 140. Cat. Was looking decently strong, but gave it back and did not recover. So relative weakness compared to BA, gapping way down below this week's lows and arriving at last week's lows. Let's see if 178, 179 can provide support. We're currently near 180. If we can get going to the upside and over 181, looking back to 182.5 where we closed. And any further than that, just back into this range, top of which is kind of near 185. If we keep slipping and lose 180, next stop 178, recent lows, and the next Keltner at 177. Google. Getting dangerously close to 100. And relative weakness yesterday. You know, little bounce, big old drop. Only got back to about the lows of where it started, or where it started the day at open. And rejected further. Let's see if it can hold overnight lows and push off to get back to 102 where it closed. 104, which was the previous low of week. 105. But if we keep slipping, we got 101 and psychological 100. GS. Some decent strength yesterday. Pushed from the daily 50 to the 21. Now it looks like we're going to open near the daily 50. If we do have a dip, looking to hold kind of yesterday's lows and where we base pre-market around that 328, 327. If that can provide support, we can push off this daily 50 again, get back to 332, where we closed in that daily 8, but we're trapped between all liquidity here and not necessarily dying or setting new lows of week. So decent strength. JPM got going off the daily 50 and almost to first Keltner up yesterday, so definitely strong. Now it's back at the daily 21. If we dip, still looking for yesterday's lows to hold and that daily 50, daily 15. If we can get going to the upside, looking to get over 117.5 to get back to some of these lows. And if we can push past that, back to yesterday's high. But we have a squeeze top. The bottom of that squeeze is down at 115. If we do slip to go test the daily 50, we'll probably also test that 115. Meta. Oh no, don't start slowing down. There we go. Every good breakout on Meta gets stuffed right back down. 4 points up, 4 points down. Not loving this name, not going to be trading it or anything. If we can go to the upside, 150, 152, on our way to 154. To the downside, if we lose overnight lows, probably going to 145.5. And if we start to lose 145, we could get down to that third Keltner, 142. Microsoft. Also very weak yesterday. Apple and Microsoft being weak is never going to help us go up. And went from second Keltner down to third Keltner now. Starting to get in that oversold region. If we lose our overnight lows, likely going to test 240, psych level. Past that 238. If we can hold, we're going to get up to 246 where we closed, and 245.5, but 246. If we can take that out back to 248 and 250. Netflix, definite relative strength yesterday. You had to be quick at open because it took off, and I think within like 10 minutes it was already in our outer shaded region. Which usually always means if you move that hard that fast, you're going to set up a nice short back, which it did to hold pre-market highs, setting up the next nice long, right back to new highs above CPI. That, again, was outside of our shaded region, midday, which sets up another short back. Made it all the way back to and through VWAP, and closed near some of these rejection points that kind of turned into support. We're back down near where we opened yesterday. Let's see if Microsoft will have a day 2. I think it's going to need the market to move up to fill the gap for Netflix to make another trip back up. But relative strength, some news came out about the estimated size of their new ad-based tier that they're going to open up for folks, which, definitely got investors interested, even with the market looking ugly. We do have a daily squeeze that's settling in on Netflix. When a daily squeeze settles in tight like this, we want to mark that we have it sitting down at about 214, 215, and 244. We almost tapped the top yesterday. We could have a fight back up to fully tap it, but that could be close enough that we need to get to start a journey down to the bottom. So, let's see if 230 can provide support if we do have a little dip. If we get going to the upside, looking back to fill the gap around 235.5, 236. If we can get going past that, 240, yesterday's highs, and squeeze top at 244. But if we start to lose 230, likely coming back to 226, 225, where these moving averages sit, we have POC still way down at 218, back down here. Meaning when that news dropped, a ton of volume came in and established POC down here before taking off. If we do give out that 227, 226, if we start to give that out, could set up a drop straight to that daily 50. We have that gap as well that we never went back to fill. So that gap fill zone could provide support on a dip to take off again. NVIDIA. Down near third Keltner, below third Keltner now. Not touching this one. Even the little moves it makes, not really that interesting to me. There's other names doing more important stuff. So leaving this one alone. I'm just going to skip over it. Let's see where it finds its floor before trying to play it to the upside. And, you know, once it's down near third Keltner, your risk to reward on shorting is just getting smaller and smaller and smaller. So, QQQ. Let's see. Got down to that second Keltner. Now we are below it, trying to fight back up to it. Interesting little wick that we want to keep an eye on, right back up near our close. So if we can, let's see if we can hold the bottom of this 30-minute squeeze, which is about that 287 to 287.5. Let's see if that can provide enough support to give us a bounce. We are opening kind of near that squeeze bottom. Could get that bounce back to squeeze top, overnight highs around 289.5. If we can go further past that, we're going to get up to where we close around 291. And any further, you know, basically where we sold off from, around 294. To the downside, if we just keep slipping and give out 287, psych level 285, that third Keltner sits down near 282. I'll take a look at Roku because it had a crazy day up and it's holding. Not sure if they had news or if this was just sympathy with Netflix, you know, rotation into streamers yesterday. But I will say, if the market is weak and we do keep going lower, we could see Roku here play a little bit of a catch-up to drop right back down, assuming it didn't have its own news. And it was just a sympathy play with Netflix. Could just come right back down. Let's see if it can hold above 72. This 30-minute squeeze bottom, that bounce point from yesterday, around 71.80. If it can hold there and get going, back up to 74, 75, and 76 where that first Keltner up sits. If we start to give out 72, coming back to 71.5 to test that daily 21, then 69, 70 psych level where the daily 8 sits, then 69 where the daily 15 sits. Shop, not interested. I mean, it's done a decent job holding its liquidity, but now it's right back down at the lows. And it's gone all of, you know, $2 maybe. So, shop's kind of dead to me. Man, look at snow. Relative strength. We talk about it all the time. We'll see it when we look over at Tesla. But snow has this gap fill that has sent it higher and higher to second Keltner. That CPI didn't even get it down to the daily mean, bounced to the daily 15, very bullish, and it just holds and then hits that daily 8 and takes off. Yesterday went for even more. So now let's see if it can hold that first Keltner around 191. I think we'll need the market to have some upside for it to move from 191 back to 200. It clearly got to 200 but then rejected, so could be setting up a play back, especially if market is weak and keeps slipping. If we give out that 191, 192, coming back to 189 where that daily 8 sits, 185 where that daily 15 sits, and we got this week's lows around 180 where the daily 21 now sits. So it could be a catch-up trade back down. I know it has relative strength, but if you see, drawing trend lines up, we held them, now we're below them. So it would be setting up a catch-up trade with the market. SPX opened near our zone yesterday, so we played long to fill the gap, which it did. Got up near the previous day's highs, rolled over. Going to be dealing with a gap down and opening near this second Keltner of 38.74. Actually, might be opening lower since ES and SPX are like 20 points off this week. So we could, I'm trying to think, let's see. We are 40 points down, we closed around that. So we could be opening near this 60, 38.60. To the downside, if we go down this week, or I'm sorry, if we go down further today, first level that's like 38.50, and then we have our third Keltner down near 3800. If we can hold and see some upside from that 38.60, looking at back through 75 where that second Keltner sits, back to 3900 to fill the gap, and any past that, just getting back to our zone above. SPY. Yesterday, this we did sell down to this zone. Now we are gapping below this zone. As long as we just set a new low and still slipping. But we have a 30-minute squeeze bottom there. Let's see if 384 can hold at the extent of that squeeze bottom. If we can get a bounce, looking to get back to 85 psych level, 86.5. Those highs where that 30-minute squeeze top sit, and this zone, if we can get further past that for a retest. We have to get all the way back to 88 to fill the gap. Meaning, I guess they didn't close it out to here. 38.50, the big key target to get back up to test. We can leave a gap and just keep dripping, but we are gapping below a key level. We usually want to get back cash session to test that, but if we just keep slipping and lose 384, 382, and then 380 are the targets, our third Keltner sits down just a hair below that 380. Tesla. Just like we saw on Netflix, talked about Tesla's relative strength this week. Relative strength in that CPI drop, how it dropped and then just went sideways, didn't go lower like the rest of the market did. We played those 300s on Wednesday, like 2 to 8, and then I think they went almost to 10 yesterday. And even on the gap down, Tesla settling at that last bounce point from Wednesday around that 298, 290, 298. right? So let's see if 298 can hold. Start to send us back through 300, back to 305, kind of where we topped out on Wednesday, in a bid to get to that yesterday's highs, 310, and that second Keltner up at 313. I think someone mentioned some levels at 312 as well. If we lose that 298, likely coming back to 295 where that daily 8 sits. And if we keep going, that 290 at the daily 21. UVXY. Gapping up into this zone that I marked a day or two ago on prep. We have highs from looks like 2 weeks ago to keep an eye on, because we are getting near those at that 10.9 and that psych 11. We do have a daily squeeze up there near that 11. So if we're going to see downside on the market today, we will likely see UVXY get up to last week's highs, through it to that psych 11, and it could even push into this daily squeeze at say 11.2. If we're going to see upside in the market, we're going to see UVXY reject this that high, come back down to test 10.5. And if we can fill the gap and keep going to the upside on the market, we need to lose that 10.5 and get back down to this 10.2. We do still have a number of our squeezes in place. Well, that 2 hour and daily. So let's see if this 2 hour squeeze top that we're opening at can reject first and send UVXY down to test that 1050. VIX. Held that daily 8 and bounced up to that daily Keltner and squeeze top, squeeze bottom to squeeze top, back and forth. Gapping up near that 27.5. So if we're going to continue slipping, just kind of gap down and go, we're going to see VIX push through overnight highs to that 28, past that 28.15, in a bid to get up to that 28.8 and that daily squeeze top. But if we're going to see a pop in the market to try to fill the gap, looking for VIX to either reject overnight highs or reject 28 and come back down in a dramatic fashion, get back below 27.5 and to 27. If we can lose 27, it's back to fill the gap. Which would be kind of near 26.5. So that's it for today. Hopefully this is helpful for everybody. Thanks for tuning in. If you haven't yet, come join our server. There's a link in our description. Every Thursday is free day, and we decided for today we'd extend it. So today, Friday, is also a free day where you can test out our tools and our system and trade along with us. So, good luck today, everybody, and we'll see you in chat.